You know, that Schweibel piece, which of course God forbid anybody on mainstream media should ever talk about, but it's gotten a lot of, you know, there was an article that appeared, I think Monday, or maybe it was Friday, written by actually an economist who I really like, Lorenzo Bini Smaghi, who used to be on the ECB board years ago and was considered for the ECB presidency, but that wasn't going to happen, especially after Draghi had assumed the post. But Bini Smaghi is actually, I believe he's presently he's the chairman of SocGen, but he was on the ECB board, and he was always somebody I thought very level-headed. So he wrote a response to the Schweibel comments that made it into the FT. I mean, to me, it was a setup when I read it, because somebody had to answer it. And then today, there's a letter signed by many economists answering Schweibel and disagreeing with him about the austerity route. So I was really glad that I had elevated that, because I thought that was an important piece, and it is and remains an important piece. But when I read everybody's comments back to Schweibel, there's one thing that they miss. He's the president of the Bundestag. You're not. And he has certain, you know, I love academics who love to throw their weight around, but their intellectual weight. But when it comes to the money, yeah, not so much you. Okay, so let me see, what was that last one? It was 18. Dave Richards, I really love when he responded. Oh, Schweibel pivots and Brainerd postulates. Okay.
Yeah, that was a great one.
And the G7, I believe I was absolutely right. First of all, that grouping is a joke and a half, because first the finance ministers put out a 20-point communique, which was a joke. I mean, well, there must be a machine that just produces platitudes. And then when the heads of states all met on over the weekend, they came up with a 61-point, 35-page. I mean, I actually bothered to read it. I was just, I didn't even know what to make of it. It had everything on everybody's wish list. You know what? If that's what you're going to do with this stuff, why bother? It's first of all, you don't have the power to do it. There's still a Congress and a court in the United States. So you can sign on to all these things you freaking wish, but all it is fodder for the goddamn media, photo ops, and now, now he's with Putin, which is another interesting thing. Okay, so where should we go? So where do you want to delve into?
Oh, anywhere. I mean, we can start there and work our way into the FOMC today.
Well, you know, that G7 truly was a joke, only because they talked about everything truly under the sun and then some. And they have very little power. So, and actually, somebody came, there was somebody from China who put out a short YouTube, I think it was last night, making fun of the whole G7. Like, who gives a shit what you have to say?
No doubt.
Right? And it's everything that I've been talking about. So you know, somebody sent this to me. I know who sent it to me. He's, you know, I said, did you see this? I said, no, but it's worth watching. I watched it this morning. And I go, yeah, this is exactly right. Yeah, this is about, why do you still feel that you run the world? You don't run anything. You don't run anything. At least do it at the G20, where you're more inclusive. You know what? The G7, think about who sits there. The US, Canada, Germany, Italy, the UK, France, and Japan. Really? Really? And exactly, okay, I don't, you're not even NATO. Then Biden goes to NATO. And again, still nobody will answer my question. You know, when they talk about the Article 5 of NATO with collective responsibility. But again, I will challenge it, and I'll ask why no media person could ask this. Is why would you talk about collective action? Would the United States go to war with Russia if Turkey and Russia were at war?
It's a terrifying prospect, but no, I think the answer has to be no. It's all about platitudes, right? It's all about making everybody feel good, but when push comes to shove, there's no substance there.
Well, and if that's right, then it's time to really think about what NATO represents. And, they hold on to these things that served a purpose, were successful in serving that purpose, but who no longer serve a purpose. I would argue the same about the NAACP. The NAACP did great work, but now it's time to rise up from there and go to what the next. Why do you have to hold on to these bureaucratic? I know why, because a lot of people get paid an awful lot of money for sustaining it, and don't think that's any small measure, by the way.
No, yeah, right. Well, that's interesting.
So, again, makes me a little nuts, more than a little nuts. So we'll go from there. All right. So now we go into, does anybody particularly want to go into the FOMC, which has been elevated for the simple reason of the Tudor interview, right? Can we agree with that?
Oh, sure. Yeah, on the national stage, absolutely.
Yeah, it's really, I was away, and then all of a sudden my mailbox was full of the, so I did watch it, the whole thing. So, so it's because Tudor said this, and then what do okay, all right, we've been discussing basically everything that's in there, and he's saying, well, then buy it, but I'll tell you what. See, I was kind of surprised with Paul, because I'll tell you this, and we talk a lot, we've discussed this a lot in this room over and over. So many trades, they run and they get a lot of momentum, and then they become mean reverting. Now, it's like Kramer, I didn't see it, but I heard, he was out talking about, well, Freeport's down and copper prices are down. Inflation has been broken. It's transitory. Well, some of it's due to the Chinese, but we've talked before. I told you the Chinese will not give you a totally free run. They gave you an amazingly long run, but now all of a sudden they're pushing back because it's like when the Russian sovereign wealth fund, sorry if I'm jumping all over the place, but when the Russian sovereign wealth fund a few weeks ago announced, well, they had moved out of dollars, or were moving out of dollars. And people said, well, do you see what the Russians? I said, yeah. And do you think they're telling you before they do it? Not a chance in this. They're not stupid. Yeah, they're going to race everybody. No, and the Chinese don't do that either. So while everybody, and I'm more than a little bit miffed, by the way, because I've been discussing this, and it's all recorded. I've discussed in this room that it's the Chinese were busy stockpiling. And when Rosenberg asked me the question 4 months ago, he says, how do you know that? I said, I'm looking at the currencies. I'm looking at the yuan. And the typical model would say that when the global economy slowed down, the yuan should depreciate, because the Chinese will do everything to protect their export markets. Didn't happen this time. So that tells me that there's a different game afoot. And you know what? It's exactly what's happened. And today confirmed it, because first of all, there was a statement put out the other day by the National Development and Reform Commission. It was put out on the 9th, talking about the commodities situation. And the NDRC in China is nobody to minimize. They're a very powerful and influential group. And they were talking about the concerns. But the bottom line in there is there's no question that the Chinese have been stockpiling. And in fact, this morning, is that the Chinese have talked about what they're going to sell off their stockpile. Well, according to Rosenberg 4 months ago, there was no stock. 3 months ago, there was no stockpile. We don't know that they're stockpiling. Yes, we do know that they're stockpiling. And you know what? It puts them in the perfect catbird seat because they've driven the prices up and everybody else is chasing them. So if prices are starting to come down, you saw it. And I think, Matt, I think I was in your room a couple weeks ago when the first time we saw that the Chinese had canceled some grain shipments from the US.
Yeah.
And that was, and the grains went, and the corn went down that day, then they came back. But they've been under a little pressure. Some of it is, of course, weather related because you are now into a weather market. And we've seen the spread. I mean, the new crop, old crop, the old crop, new crop was out to almost $2, I think, at one time. Hold on, let me see. Oops, sorry. So what do we got? That is out, well, we're at 98, but it was out to $2. So as the weather forecast seems to improve, that the drought, that they got rain in certain growing areas, that the weather is not going to be as hot, maybe, but I think it has more to do with the Chinese. You know, it takes a lot to, and everybody who's a trader certainly understands, it takes a lot to put a market up.
It does.
Unless it's AMC or, you know, something like that. But it takes a lot of buying, but to lift commodity prices takes a lot of buying, And for prices to stop going up and to go down, it's just, you know, you have to remove that buying. And you can't forget that. It's a big part of it. So if you're a big consumer and a big user of something, and you see that the speculators are running with you, well, how long are you going to let that go? Unless you're just planning to sell into it. And I don't think so. The Chinese have certainly shown us that they need all these things.
That brings up a question, and again, could be completely out base, but could that exact scenario be playing out in the yield curve?
Well, you know, that's a very good question. And that's one of the, I know that's one of the blog posts that I talked about.
Yeah.
So it could be, but because of the power, you know, John Others wrote a piece this morning trying to understand this too. And we've been trying to understand it for months and months and months and maybe years. I don't know because, and everybody says, well, the Fed publishes what they buy. Do they? Do I trust them? Do I truly trust? I really don't, because there's another group. It's like with the ECB, you know, we can watch the ECB and European rates. And I know that when these spreads, let's see where the spreads are now. The German Italian is at 102. It was all the way in at like 85, and then it went out to 117. So we're mid-market. But when they come in, and they want you because they want you bidding up those markets. There's a reason that they're coming in. Because they have a different role than the Fed. They're actively trying to corral 19 different variables. So the way they have to go about it, so they want you. They want shorts to be bidding up. So does the Fed. Because again, you know, the Fed last year when they went into the corporate bond market, remember how proud they were that they only bought like 13 billion because they were so successfully jawboning it that with minimal amount of expenditures, they got a lot done. Too bad they didn't learn anything about the other 120 billion they're buying a month.
Oh my gosh. I don't want to make too far of a leap, but going from the yield curve flattening, yield curve control to the market forces into forward guidance and will the Fed or will they not start to unwind?
Well, you know, again, we had, we now have Tudor throwing the gauntlet down, right?
Oh, he is.
So now if you're at the Fed, oh, thank you, Chair Powell, for taking my question. As soon as I hear that, I know you're a sycophant and a
Absolutely.
you know what? Ask the question. Stop thanking him for doing what he's turned his job into. So thank you, Chair Powell, for taking my question. Oh, thank you, Matt, for taking my question. Again, they're in a difficult situation created by themselves. Now, he's a lawyer and he's supposed to be good at words, and you turn in a phrase in order to maybe turn this. So does he extract himself from the trap he's laid for himself with the jobs issue? Now, Tudor was kind of interesting when I listened to it, because what did he say? He said, according to the jolts, the Fed really should understand there is a job opening for everybody who purportedly lost their job through no fault of their own. Tudor didn't say that, but I'm throwing Powell's words back upon him, upon Powell. And that should be the criterion. But that's not really true. So I didn't know what Paul was trying, what Tudor Jones was trying to get at there, because when we had 3.5% unemployment, I think the jolts was at what, 4 million, and the people who were in that unemployment were less than that. So I'm not sure exactly what they were trying to ferret out there, but by Tudor Jones doing this, he puts Powell into a sticky situation, and I'm sure somebody will pick up on it. Somebody will ask the question, well, Paul Tudor Jones, a formidable trader, was out there discussing this, and ask for his response. So we'll see if he gets that question. But if he doesn't do it and he waits for Jackson Hole, which is in August, does the markets run wild? But right now you've seen housing start to slow down, and it's slowing down, as Peter Bookfire has talked about, because of the Fed's policies, by the way. The Fed is responsible for the slowdown, even though they'll never own up to it, because housing prices have soared so high that a lot of people have had to step out of the market. They can't afford it. Now, and it's just not building costs, it's the lack of housing that's sending prices higher. So, and Bookfire and others, including myself, have argued you should have stopped MBS long ago. Well, why are you buying mortgage-backed securities and keeping mortgage rates so low when housing prices are soaring? They've created so many traps for themselves.
So many bubbles.
Paul Tudor Jones also said something, and he talked about the myopicness of the Fed, and he used the Sherman tank as the metaphor for it, that it has a single sight, and you can't really look left and you can't really look right at the same time. You just look straight down, and they're looking at employment. Well, if they're looking at employment, then the Fed is certainly not moving. Then inflation has to be transitory, because again, to quote the Fed over and over and over again, as they became the Ministry of Social Justice for all these people who lost jobs for no fault of their own, until those people are all back in work and wages have risen, and we've recouped all that, we're not even thinking about. So I don't know where he goes here. Now, I think certain aspects of the markets would like to see, but be careful here, because we know that the algos are so headline driven. What will take place with the headlines? Don't know. But the journalists will be crafting it. Will be there. Will there be anything in the statement? I don't know. Probably something important. Is this vote going to be unanimous again? because there's an awful lot of dissension from the main Fed line, and yet the votes have been regularly unanimous. So it's one of the things I'm going to be looking for. Are we finally starting to see a break, or it's just more blah, 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 a lot of talking per usual? So
what will happen? What do you think how do you think the market will react if Brainerd or somebody else dissents?
Brainerd's not dissent. Oh, the only way she would dissent is to be more dovish.
Yeah. Okay. Well, in that case, we're gonna get we're parabolic.
Well, if she had to dissent because it was a more quote unquote hawkish statement, I hate that phrase, but okay, hawkish statement, then her dissent would not be as important. It'll be more important going forward, but as of today, it would be not that important because Powell will
Okay.
the other way, and that will be more important. So I think you'd get, I don't know what the yield curve would probably flatten, by the way.
Yeah.
Okay. Not initially, but that's what I would watch for. The equity markets would probably break, but depending upon how they couch this and now we're back to the goddamn dot plots, which the media is making it a big deal because it's easy for them to read it. But these dot plots have been so wrong. I don't even know why they continue using them. Because I know why, because it makes an easy story to tell.
Yeah.
You know,
you don't have to think much.
follow the bouncing ball, so to speak. Okay, all right, everybody can do that. That's pretty easy. But if it's hawkish, I think the curve would flatten more, and we've seen a pretty good rally here, right? So going back to your question, why have the bonds rallied? You know, I think it's been probably threefold. Number one, that the FOMC may be extending its duration in an effort, because they got a problem at the front end, has been talked about ad nauseum, because there's so much cash available in the system. So it would probably behoove them to move further out down the curve. Number two is the infrastructure project, while it'll come, it won't be nearly as big as some people were forecasting. So that's taken away some of the robustness in the inflation discussion. It's taken some away. Number three, remember that as the Fed buys more on the long end, they don't hedge, so you're taking that selling out, and there's just shorts, and the shorts have had a hard time because, as John Arthur, who the hell would buy a bond? Really, I'll ask that question on and on and on, but I will pose this to you that I have to pledge, a T-bill as part of my margin, and I roll it every quarter. So I told people, I said, I just rolled one in May. I bought a $500,000 T-bill for part of my margin, and you buy it at a discount. So how much do you think I earned for the 3 months?
No, nothing. Nothing. Almost literally.
56 cents.
Almost literally nothing.
$2.56.
That should be a crime. That really should be a crime. That really should be a crime.
So there is a lot of shit going on here. Sorry, but so there's a lot to ferret through. So tell me what changes. Now, one other thing that you might see today, and I know I'm throwing a lot at you, because of the problems on the short end, you may actually get, Mark Cabana, who I think is good. Posar thinks no, but Cabana thinks yes, and a few others think yes, that you might get a hike in the interest on excess reserves and on the reverse repo in an effort to take some of the pressure off going negative. Posar says no. So we'll see. So there are some things. Now, of course, the algos will read it, Fed lifts, interest on excess reserves. Well, at 5 basis points, you'll get movement, but you know what? I will have my orders set in certainly the precious metals well below in anticipation of that and hope that it happens.
Is that why you're thinking that gold has come off from its high of 19,
Yeah,
around
you know,
19?
I think gold has been, number one, there has been a few reasons. First of all, it's tired. It has,
It was a great rally.
yeah. And other commodities, again, with the Chinese, are they buying, are they not buying? It's interesting that the gold broke $100 after, everybody said, oh, the Russians, we're moving this. That was the top. So that makes that point. I think the gold had just gotten well in front of itself. You had Bitcoin held. There are a lot of things. And you know what? Gold currencies ran a little too far, gold against the other currencies. So everything's kind of settling in here. And as you say, even though interest, the long end was going lower, I think as the talk of the infrastructure was starting to get scaled back and that Biden wasn't going to get everything, I think the market had overextended itself. But at the end of the day, I will argue, and I'm not going to get into the inflation transitory or not. I think that's such a fallacious argument. To me, it's a head fake. Bottom line, interest rates are as negative on a real term basis, probably more so. In Germany, and that's those Schwabel's, comments is in Germany, real yields are probably just as, I thought that they were going there, probably negative 3%. That's right, negative 3%. Now,
So, go ahead.
It hasn't led to the problems yet, but that's why the Schwabel piece became so important, because he was very much softer last year, but now as he's seeing this, he's moving, or he's speaking for somebody and warning about it. That this is going to be a political problem in Germany. And you know what? And that's the problem with the media and the economists in the world. They don't know how to see this as a problem.
I'm baffled. I don't even know how to think about that anymore. Facts don't matter. It's about belief and opinion, and it's about protecting one's, belief system, as opposed to challenging your belief system with a logical argument. So we live in a fallacious world. I don't know how far off I am. That brings us back to the G7 in my mind. I'm all over the place now. But back to the agreement for a 15% corporate tax, and what does that mean for bonds? What does that mean for equities? What does that mean for a world of make believe, a world of this is what I believe, and so this is what is real, as opposed to this is what's truly happening, and these are the logical consequences of it.
Well, and that's right. And that's why, let's see if I still have that Chinese piece. Because that's why, if you were a rising nation, meaning, you're starting to get your stuff together, your economy's starting to grow, why would you agree? Why would you agree to it? And that was my point. Why would you agree with it? Because you've been doing what's good for you for all these years. Why shouldn't I be doing what's good for you? Now you say, well, the world works better when we all can work together and then rather than being odds. But you're asking me to give up what may be my strategy in an effort to come together with the world. Well, maybe I'm not interested in that. I'm going to create a tax system that is beneficial to me. Well, I'm not going to do it. Why should I go to that? Because you want me to pay for your Well, you can say, well, yeah, well, I want you to pay, but because it's going to benefit you. If I go into a very high growth economy, meaning the US, uh, I want you to help pay for that. Well, wait, hold on a second. No. And that's why it'll be interesting at the G20, because they're bringing this to the G20 because they know they couldn't just do this without, there was no way, because anybody, the India, China, they're all going to be pursuing their own agenda and go, hey, are you out of your freaking mind?
Jeez.
So that's why, and yet the G7 thinks they speak with such authority. Yeah, okay, got it. I got it. I got what you want, but you know what? Don't put it on me. Raise it, and it's funny. It's really funny because what was the old IMF playbook? When you ran into massive deficits, you went into austerity, you cut spending, depreciated your currency, and restructured your debt. And what is the G7? What?
God bless you.
Thank you.
The opposite. The opposite.
Who's the backbone of the IMF, by the way? We know that. What are they asking? They want everybody to lift their taxes, corporate taxes, right? Whatever you wish, so that they can capture those. Well, I'm not sure that I'm signing on to that. It's a nice story. What, are you going to sanction me?
Yeah. Paper tiger. Sanctions don't matter anymore. So
yeah. Thanks for sanctioning. Take your sanctions and stick them right where, as my football coach would say, the sun doesn't shine.
So they're looking, the IMF, well, not the IMF, but the G7 is now back into cutting taxes, depreciating currency, and increasing spending and increasing debt, following the US playbook, with Germany maybe tugging a little bit behind. But what is, again, what is the exit strategy, and how does this end?
Yeah,
School bonds are at all-time highs and continually rallying. The whole thing is baffling to me and scary as hell.
And you can see the politics are heating up in Europe. That was the point of that Schweibel piece, and then the response to it. But you could see that the discussion is heating up, and it's going to be, because we're coming into elections. You got Macron, who, again, I think I was perfectly right on top of him. By the way, he believes he's the reincarnation of, or he is the heir to de Gaulle. So.
Oh man! Oh, that was a terrible thing when that guy grabbed him and slapped him.
Oh God! He slapped him.
That was unbelievable.
It's so French.
It's so French. That's exactly what I thought. So, oh my gosh! Only in France would something like that happen.
Yeah, they slapped. Well, it was like at you may not remember, at the ECB press conference. I think it was in 2016. When a woman ran up and jumped on a table and dumped a wastebasket full of torn up paper on Draghi. I thought for sure coming to kill him.
Oh my God.
Oh, yeah, if I was Draghi, I would have been terrified too. She jumped up on the table and dumped a pail of torn up paper on him.
Hey, Matt and Ira, can I jump in here?
Yeah.
This
Hey, Jake.
Hey, I've got a thought, and hopefully I can tie it back to something fairly relative or whatever, but something Ira said early kind of just threw a light bulb off on top of my head, when he was talking about the grain spread being $2, for the front contract versus the new crop being $2 less. Here's something I heard about a week or so ago. They said they could bid it to $3 spread, and they can't get the physical stuff. So what a lot of the commercials have done is quit bidding it so high because it doesn't matter how far they push it. We're so low pipeline supplies that it wouldn't matter how much the difference in spread they had. If nobody's got anything for sale, nobody's got anything for sale. It doesn't matter if they push it to $30. But my point isn't necessarily on the grain side of things or the commodity side of things, but do you think this is relative to other markets, like maybe real estate markets, you know, and some of these other markets I don't necessarily understand? Have people just quit pushing the bid to kind of see what happens here with what's going to happen with the this inflation, or if it's transitory or not? You know, are they sitting on the sidelines because it doesn't matter how much they push the bid, you know, they can't get it bought? So many people are buying houses, you know, paying, you know, well over asking price for it. Well, if they're paying well over asking price for it, there was 3 or 4 people that didn't get that house bought. So do they just quit eventually and wait to sit on their hands? I guess that's kind of my question, my point I wanted to make on that.
Oh, okay, so real estate is far different, but you're talking about gaming the system. So especially with the way that real estate, you know, this idea of comps, I've never been a fan of it. I just don't understand it. First of all, it's backwards looking, right?
Right. Yeah.
And I just sold a house, believe me. I know well what I'm saying. You look back, and if no houses have sold, you may be going back 2, 3, 4 years to get a big enough pool to set the price in your neighborhood. But that's ridiculous. That's ridiculous. That's, you know, you want to talk about driving while you're looking through the rearview mirror. The whole idea of comps in the real estate market is exactly that. I wish somebody would file a class action suit. Maybe I should, because it is preposterous on the way that the quote unquote realtors.
There's no true price discovery in it because
There is no true price.
It's so backward, so lagging.
Right. So now if you want to game the system, if you have enough money, keep pushing it higher and saying, no, I'm not selling it. And then, so, you know, so that's to me the response to it. What's going on in the grain market? So who is it? This is Jake, right?
Yep, this is Jake. Yep. And I've been away for a while because I've been out in the field so long this season, but I'm finally done. So
wait, and where are you in Tech? Where are you at?
I'm in Iowa, Western Iowa.
And,
Yep.
and what are you planting? Beans and corn?
Corn and beans. Yep. About 500 acres of corn, 500 acres of beans.
You got any hogs?
I do not. I've got 3 kids here that I'm raising, but I haven't got them to market weight yet.
That's similar. No. So, and how's the moisture been?
We're really short, and our subsoil is really short. But you know, here's the thing: it's June, so
Yeah.
we've got. I was talking to Matt, you know, probably a week or 2 ago. You know, I said, look, Matt, this corn is 6 inches tall. In 3 or 4 weeks, it'll be 6 or 8 feet tall. You know, but long story short, things are evaporating quickly because there's not a lot of cover. You know, the vegetation's not pumping humidity back into the air. But a dry June is not always a bad thing because a lot of the vegetation will root down into the subsoil and actually start gaining that moisture. But it's, you know, it could go either way on tougher ground. Our potential is there 100% yet, but every day it doesn't rain, it takes 1% or so off of that potential. But, you know, who knows? We don't know until it's over with either, whether, you know, if we're going to grow a crop or not. But it's not the disaster I think that they're, you know, that you're seeing some places on, you know, whatever social media outlets or news there is. It's not that disaster yet. It's got the potential to be.
Okay, so did you go to Iowa State?
No, I went to school Hard Knocks.
Okay, that was my second question. Okay, so you learned farming for the family, right?
Yes, yep, trial and error and my own pocketbook.
And so and your equipment, do you own or rent?
I own all my equipment. Yep.
Yeah. So therefore the farm's been in your family for a long time too then, right?
Yeah, most of the ground.
Yeah, okay.
Yep.
So to bring in a bushel of bushel of beans, what's your cost 7.5, $8?
Yeah, so here's that, and that's a great talking point. So, to grow a bushel of beans, it's probably cost around $9, you know, all weather. But we bought all the inputs for that bushel of beans, you know, October, November, January last year. We were buying those inputs on a, you know, a $10 soybean market. Well,
Yeah.
those inputs are going to be priced a lot different come come the fall of 2021. You're going to be buying them on a $13 input market.
And do you buy on credit, or do you manage
For
yourself?
cash. Yeah, I mean, it takes probably at least 75% credit to put the crop in, take it out. See, I mean, you have like probably 25% equity in that, and the rest is borrowed, you know, on a yearly basis.
All right, you know, I'm just, because people, you know, I really love talking farming. I've never farmed in any meaningful way in the United States. I've worked other places, and that was in orchards and doing some planting, but nothing like, you know, the great Midwest, which, having grown up in it, you know, you certainly see it. Saw the planting and saw the harvesting, and you pay, and it really fascinates me because I know how hard farmers work. I know that.
Yeah, and there's a lot of intricacies into it, and you know, I'd love to explain it to you, or you know, tell you everything I know anytime. You know, I'd be happy to do that at any time.
How far are you from 70?
From Interstate 70, or?
Yeah.
70 goes through Missouri and Kansas, so you know, we're, I don't know what, 200 some miles from 70. 80, Interstate 80, I'm about 50 miles north of Interstate 80, where my farm's located.
Okay. All right, I may find you one day.
Yeah, you'll have to do that. So I live, I actually live south of Sioux City, between Sioux City and Omaha, right off of Interstate 29.
Oh, God,
but I farm
yeah.
a little ways away from that, but you know, so it takes commodities to raise commodities, you know, all your inputs, your real estate's a commodity, everything else. And as that price rises, your input price rises. So I think as long as farmers get a crop this year, they'll make some money. The trouble is they could spend the next 3 or 4 years giving it all back, if not quicker, with their input costs.
Do you have irrigation, or are you?
No, I don't have any irrigation. It's not very common in our area.
Yeah, I would figure that it wasn't. Well, although if you're along the river, if people are along the river, can they irrigate off of that river?
Yeah, the groundwater table is pretty high, so they can drill wells and have pretty easy access to groundwater to irrigate it. But that's the whole, that's tougher ground generally along the river. You know, and so irrigation works, but it works and it doesn't. It's a little more finicky that way, a little bit different than Nebraska. But you know, right now they can't, even if you started pumping water right now, you can't keep up with the evaporation rate, because you know, we're looking at 100 degrees tomorrow, and granted it's supposed to cool down next week, so that'll change a little bit, but you can't pump out enough fast enough to gain, to get ahead of it, if that makes any sense.
Yeah, no, absolutely, because you know, you're like putting the finger in the dye, and you're not getting anything, and all it's doing is costing you money.
Right, yeah, because, well, and there's no cover, you know, the vegetation, it's not big enough, it's not thick enough. So I mean, as soon as that stuff hits the bare ground, it's evaporating. And it's different when the you know, the fields are full, or you know, the corn's 7-8 foot tall, where the actual dirt doesn't see the light of day, you know, so the evaporation rate would be a lot lower then.
Okay.
So and most guys don't even start irrigating until it's that, you know, until mid-July, till it's that tall.
So let me ask you one other question.
Yes.
So I've heard discussions over the last week, I've read discussions about them shifting the, what is it, the renewable fuels,
Standard.
because they finally woke up to when they started down, and I've been discussing this. In fact, yeah, Matt, Terry and I had discussions back in 04 and 05 because we were looking at a couple ethanol plants in the Texas Panhandle, but those were sorghum and sugar-based plants from the sugar co-op in Texas. And I loved that business so much, but we couldn't, there was no way it was coming out that anybody outside of Texas was ever going to walk into that business.
Sure. Yeah. It's pretty inclusive club.
It doesn't happen. I've learned enough about Texas. If it's good in Texas, it stays in Texas.
Yeah.
So with that changing, I think that put some initial downward prices on the grains too, because, you know, if you're going to get some change in that, and rightfully so, because, you know, when you start, I certainly, ethanol, and I was a professor at the University of Illinois because I'm an alum, and I was able to target in there, and there was a guy, Peter Goldschmidt, professor, brilliant guy, knows more about ethanol and beans. He was the one who advised the Brazilians on their corn and sugar ethanol. I mean, a guy taught me so much, and he wouldn't take it. Finally, he consented, so I paid him $250 an hour regularly. And he taught me a lot. He was a great consultant, and he answered me. He was on sabbatical in Paris, but we, you know, had great computer content. And I would go drive down to Champaign, Urbana, and sit with him. Taught me a lot about this. So I was enamored with this. But if they change this, it'll mean that more food, well, more grain is. Although you can't switch it that fast because certain things are already allocated. But if you see this and prices, stabilizing here, you know, I think that if we do get any type of drought, that we're going to see record highs in the grains. And the reason I've said that, I've been very consistent about it, and this is why I believe that the Fed and others are missing what's going on in the world, is that food prices went on a tear. Even when during COVID, even when the world economy was struggling badly, and we had 2 record crops, 3 record crops. For you know, Brazil.
Yeah, or at least they said we did. You know,
right.
Not to get into that debate, but I mean, yeah, no, you're right, 100%.
I mean, we did. Brazil had, you know, look at the Brazilian farmers have been raking it in, no pun intended, hand over fist, because the real was cheap and the Chinese bought everything they had. So much so, you know.
Absolutely. So and it ran them out. I mean, they couldn't sell it fast enough. That, you know, so then it ended up we're the only game in town
and
that had any supply.
We actually imported some beans from Brazil because we had down the supplies here. You know, stockpiling is real. Now the question is why? Now the Chinese are certainly technologically sophisticated. They have just as good as weather satellites as Jake is using, if not better.
If not better, yeah, if not better, absolutely.
So we have all this in play. So, you know, and that's, but I'm not doing this to get into the transitory. I don't care. It's still Fed policy as far as I'm concerned. Now, what are you going to do with the policy? Don't argue transitory. We're arguing words. And yeah, have we hit choke points? Yes, but that's to be expected. But if things are coming back fully online, those choke points should be effectively remediated fairly soon. But the problem with the grain markets and the food markets is we didn't have choke points, meaning that supply kept up with record crops, and yet prices were still going up. So there is,
yeah, and the only choke point we did have was maybe a logistical one, not the actual supply thing.
Right,
we had any.
Right.
Yeah.
But, you know, floods on the Mississippi, whatever.
Stuff in the wrong place at the wrong time.
Right. Exactly.
Yeah.
Exactly. But outside of that, no. And so there are other things that work, and the other things that work, which, you know, the Fed never wants to take responsibility. This is an organization who's never been wrong. And when they are
But
wrong, they don't say
and I,
that they're wrong, they shift, just like Powell.
right. And I guess my point or my question is like, is it, or, you know, the thing, they can only keep things under wraps so long, and the longer you keep it under wraps, the worse they make the tougher they make the outcome, or the bigger swing the outcome is on the other side once they have no choice than to shift.
Well,
I guess that's kind of that's a light bulb on my head.
Yes,
what I
but
was getting.
but your point is right with Matt's. Once you break the signaling mechanism that the bond market has provided over the last 60, 70 years, once you break that, how do you know what the price of anything is? You have no idea what the real price of debt is.
Right, yeah, no clue.
And the Fed owns it, and yet they don't want to own it. You know, they don't want to own it, and they won't own it. You know, they'll come up with a counterfactual. Well, if we didn't do this, you know, again, I've discussed this with Santelli for so many years. When the first rule of being in a hole is stop digging. The worst mistake in central banking in the last 50, 60 years was Bernanke's cowering in the face of the taper tantrum. Huge mistake. And I wrote it in real time in the blog, and we've had to live with it and adapt with it.
And the longer you put it off, the worse you made it, or the tougher situation.
And now they're terrified. They're terrified to do what needs to be done.
So they just kick the can down the road another day.
Well, or you know, paint it over. But all they do is keep painting themselves into a corner. You know,
or they try to, or they're going to try to spend their way out of it.
Well, and they appoint themselves a new mandate. They are now the Ministry of Social Justice.
So, which absolutely changes the term equity.
Yeah.
What does equity mean anymore?
Yeah. Well, listen, again, let's say I wanted to buy a 2-year note for my account, all right? Which I'd be a fool, because if I look at let's see, I'm looking at these 23 euro dollars. They're effectively yielding 93 basis points. But these 22 is only yielding 38. And these 21 is yielding 18. But if I look at the Fed funds, now I'm looking at Feb 2022 Fed funds, 8.5 basis points. I can't lock up money for any kind of, and to go out 10 years where if they're successful, because let's face it, they're afraid of the phrase, they're afraid of inflation, but they've told us that's what they want. And why doesn't, when Tudor was interviewed, why didn't Andrew Ross Sorkin, I saw nothing from,
Oh boy.
You know what, all he wants is a headline. All he did was want to know if the Reddit crowd could have a play. I mean, that's what he kept trying to get from Tudor so he can get that headline. Of course they can. We saw with the silver over the January 31st, February 1st, when, we're going to, you know, and they went after the silver, and that was the high made it's silver over $30. And then of course went the other way because they have no idea how the market works. And there's bigger people out there than them who through the use of leverage have far greater market power than they'll ever know or understand. And it drove it right in their face. But I know, Matt, we did a thing and I said, buy, you know, and I wrote in a blog, if you thought that was the case, I'd be much apt to buy platinum and sell gold.
Yes, and that was such a huge trade, and it
was a very good, right. The silver wound up getting the shit beat out of it, and the other worked very well.
Yes, it did.
Now that's you know, I love when markets correct and go sideways for a while. It shows me more than anything. that's where we sit. But I would be listening for keywords today about the interest on excess reserves, raising the repo. He's going to try to. We'll get a sense, but if these idiots in the media, and I don't mean that they're idiots because they're stupid people, they just all follow a narrative. That's why they're idiots. But somebody should ask, well, Chair Powell, in reference to Paul Tudor Jones, because he's a highly qualified, do you think that there's, should we be more concerned here? Something of that nature. Let's see if somebody asks that question.
Did you happen to see Rick's argument yesterday?
No, I heard about it. I have it sitting on my computer. Somebody just sent it to me. I don't watch it. You don't hear a television in the background. I do not listen.
I've got it on in the background, but the sound is down. The only people I've listened to are Rick and Art Cashin. They're the only two that, and when they, interviewed Druckenmiller or
Right,
Tudor,
right. Yeah.
I met Tudor Jones once at a fundraiser, and I thought maybe he would want to walk past me like he was Mickey Mantle, and I was a 2-year-old.
Yeah.
He was a nice guy, but what's he want to do with us? Here's though is the key words that, and I was talking about this before we got on. The key words that we're looking for, they're going to be talking about inflation, obviously, and will it be God willing, somebody will ask that question and hammer it home. If it's not Leisman, maybe it'll be somebody from some blog they get on in between asking about the jobs, job situation. But I wanted to ask you again, Ira. It seems to me like the Treasury and the Fed are working hand in glove now that Powell has changed to the social justice minister. The social justice minister working in cahoots in conjunction with Yellen and the government in spending our way out of this. Using the Australian model or the Australian theory of trying to spend our way out, as being the exit strategy that we've so often asked ourselves about. So it looks like that we're going to have a lot of discussion back and forth before the Republicans and Democrats can agree on any sort of and I use the term very loosely, infrastructure bill in order to be able to try to spend our way out of it. The way I think about it, going back to the housing market, Jen and I have been living in a home that we bought as a rental along, with partners, her sister and her whole boyfriend and things. And for the last 3 years, and I've mentioned this to us, we've talked about this, is, I've thought that the housing, that housing since 18 was a bubble and would start to come back more towards normalized levels. Yet they just continue to scream higher with, as I think you just really, really well, very smartly pointed out, that those with money are bidding up the market and getting off their positions, selling off their positions while bidding it up and then turning it around, waiting to whack it lower, just like not whack it lower, but.
Okay, let me bring more reality even to that, because there were a shitload of homes bought out of foreclosure. So there were groups like Blackstone, huge groups who bought thousands upon thousands of homes. Well, what do you think it's in their interest to do? As we want to say, okay, you want to play? Let's play.
Hey, can I ask a question real quick?
Sure. Ira, this is Neil. This is Albaz from the old Russell Pit.
Okay.
Well, first of all, Mr. Harris, thank you for taking my question. No, I'm just
Mr.
kidding.
Harris.
No, you said that earlier about the sycophants asking Powell the question. But
Thank you, Neil. I appreciate your reverence in the highest degree.
No, but with the housing, when I look at it and I look back to like what can really cause a problem, in a true insolvency event like 1929, 1987, 2008, and it's housing. Like the Fed can backstop anything it wants, but housing is too big. Okay, so when I look at it, I see all they're doing is to prop that up. So you have the unemployment, the free money coming from the SBA, and the PPP, the grants, the EIDL loans, the whole lower for longer, wage inflation, no eviction and foreclosure ban, let the economy run hot, you know, and now this new social justice mandate that you discussed all points to keep people in their houses or it's game over. So do you think they really care about anything else if you look at it through that lens?
Well, you know, it's really, you know, that's a very great question. And we have to return to this, because if you go back to whence this was all put into motion, and I'm going back to 2010, August, Jackson Hole, and Ben Bernanke gave that speech, which laid out what he called the portfolio balance channel, okay? Which is to get you to shift to more aggressive, meaning any investor or to more aggressive, because they were worried exactly what you talk about. They did not want deflation setting in. So they were trying to elevate all types of asset prices to keep you from liquidating assets, because that's really what deflation is. When Japan was in deflation, you get it because people are so in debt that in order to get out of debt, the creditors start calling in the loans and asking for the collateral, and then they're selling it, and that's what gets you into that downward spiral. So the whole purpose of QE2, QE1 was to provide a shitload of liquidity into the system, which it needed to prevent that from taking place, number one. QE2 perpetuated it under Bernanke's, what he called portfolio balance channel. So that's what we've seen. So housing is part of that. Right now, the Fed is so fearful of not getting employment elevated that they're willing to do anything to sustain all asset prices. So your point is absolutely right. Now, as Bookfire has talked about, and rightfully so, what they're doing is pushing it away from the people you are purportedly helping. But when you pick and choose what you want for your mandate at any time, because, oh, we have the tools to deal with inflation, but you want inflation. Oh, but we need to have full employment. Because as Bernanke says, we will not be satisfied until everybody who lost their job has had their job back, and especially in the minority communities. You know, that's what made them, that's why I deemed him a year ago, this Minister of Social Justice, because he was adamant about it. I think it puts you in a very terrible position as a central bank, because you're concerned, especially in a fiat currency world, because you have no other avenues, is to sustain the credibility of the bank. There's nothing backing up the currency, rather just a full faith and credit of the United States government. So you have to be very careful. And then you add in the most important thing, which is you're the world's banker. And for a long time, they never want to entertain that. So now the pressure is even on you more and more, because you're basically providing the financial liquidity to the entire globe. I mean, other central banks have certainly joined in, but for the emerging world and everything, they didn't want the dollar to rise. You know, let's go back. It's a year ago in May. We had on this site, we had these discussions. And I have to tell you, I was in front of the Fed. I said, open up. That was back in March and April. Open up the swap lines, because you need to flood the global system with dollars, because you were starting to get a deflationary scenario, because the dollar was rising as people were panicking, and there was afraid that there was going to be an onset of a massive deflationary spiral. That was a fear. So the Fed had to do that. So the Fed has a lot of responsibilities, and just own up to it, you know. But I'll tell you what, being the social minister is not one, but that forces them to ensure that asset prices don't collapse. And right now, housing is in that mind. Now, we're not in 06, 07, because I don't think you have people as levered up into the housing game.
No.
That makes this different. And interest rates going into it are so friggin' low that, and banks have learned something, that they'll always unlearn it, because when times get good, you forget everything you learned in the bad times. and they'll make loans, but right now people are not overextended,
But
especially.
when it comes to like the interest rates, that the raising of the rates started the foreclosure crisis in 2008, or at least accelerated it. Because
Well,
all of a sudden, all the variable rates started pricing people out. It
that's
just started in waves.
that's
Yeah.
that's right. It's the variable rates, and I had a very I had an argument on CNBC at that time with Meredith Whitney and a few others, because I said, look it, if you want to help Main Street, lock in everybody's adjustable rate, or anybody who wants it, lock in every mortgage in the country at 3%. That would have helped Main Street, because it was those exploding arms that were crushing the middle class, because they took out teaser rates, as they called them, and then they exploded, and people were their monthly interest rates were going to 8-9% after the teaser rate had expired. I said, lock everybody in, and Meredith Whitney said, no, you can't do that, because you have contractual agreements with the people who own the debt. And I said, let me explain something to you. All restructuring of debt means that the creditors have the abrogation of the contracts. That's what it means to restructure. Yeah, I know what the original bond covenant said, but you can either wind up with nothing and wind up in foreclosure with a depreciating asset, or you restructure. And the United States government at that time, when rates were already coming down, they could have borrowed money at 2.5% and made everybody mortgage, a 15-year mortgage, at 3%. And you know what? We never would have had that massive foreclosure crisis. You would have had some, but not to that extent, because you're exactly right. It was those adjustable mortgages exploding that killed people.
So, but I mean, my question really is, are they all in? Because if housing goes game over, like you can throw it doesn't matter. Like the reserve currency, the bond market, the stock market, we're insolvent. So is it really will they just do whatever it takes to keep the game going? And
Yes.
The only way to do that is to keep the rates low and to keep pumping.
Yes, because see this again, and it comes back to Ben Bernanke's. And these are his words. I'm not putting words in my. It's what he called his portfolio balance channel, which was moving you from a housing and into other assets and out of bonds. They didn't want you in bonds. Again, that's too conservative. They wanted that money, as Keynes's words, the animal spirits. So that's what this was about. But Ben Bernanke's academic credentials were made on analyzing the effects of 1937. And at Milton Friedman's 90th birthday party or celebration, I actually had him on the floor of the CME that morning. I have a great picture. Leo said, come on, I want you to spend a little time with Milton. So we went into the Eurodollar gallery, and we're,
that would have been great.
that was really what a great thing it was to be able to talk. I mean, it's the people I've met in life, through so many things. And that was great to be able to sit and chat with them. But at that 90th birthday celebration, Ben Bernanke promises Milton Friedman, we will not make the mistake that we made in 37, which was the greatest mistake made in the Fed's history, because you had the United States Treasury. The United States economy was really just starting to get going. And then all of a sudden, the Treasury raises taxes while the Fed raised reserves and interest rates, and it brought on a new recession, devastating, and kicked the legs out of the recovery. And that's why I always refer to Ben Bernanke as a 37er, because they will. So Neil, it's a long answer to a short question, which is they will not allow deflation. The simple answer is deflation is their greatest enemy. They tell you because they learned from Paul Volcker. We have the tools to stop inflation in its tracks. We don't know how to get out of a deflationary spiral. And that's why Japan for 20 years scared the hell out of them. They didn't understand it. Well, how could this? I'll tell you who did understand it. Krugman wrote about it, and he wrote about it from the beginning, what was going to take place. Can't stand Krugman because I don't like when these guys go into the political realm, but as an economist, Paul Krugman, on his book on depression economics was great. Was absolutely great, written in the 90s, detailing out Japan, well worth a read, and he writes well. So it's eminently readable. That's what they fear, Neil. So and that's why I'm bullish gold. And I've been bullish gold for anybody who's paid attention to me since 2003, 2004, because I saw what the central banks were willing to do. And I get bullish gold. That doesn't mean that I don't get short, and it doesn't mean that I trade it. But my long-term view is, until otherwise, that as long as central banks will go to any extreme to prevent an onset of deflation, negative real yields are the cornerstone of that. That keeps me always owning some gold. You know, I'm talking about physical, not the way I trade it is different, but keeps me in that camp until I see otherwise, because they've told me they will go to any extreme to prevent the deflationary spiral. Does that, I think that gets to where you are.
Yes, that was pretty much
Okay. Now,
everything.
Denary asks a great question. Let me deal, because I have that same issue. How many job openings are real? So the jolts.
Oh, yeah.
Now, I think, Denary, I'm with you. I don't believe it, because I think people post job openings because they're looking for so many workers. You may as well post as many as you can and just keep them out there and hope you attract somebody. So I agree, and I think with you, that a lot of them are fictitious, because who checks them? Who stays on top of them? So if I'm looking for 100 workers and I do hire 50, but I keep the 100 out there, well, then they're not. So I'm with you, and I have no way to check that. It's either yes or no.
But Ira, I want to add, that was my question. So I talked to some of the local people around here, and like, you know, the grocery stores, the fast food joints all want people like crazy. And they have all these advertisements. The minimum wage in New Jersey is $11. It's going to go to $12 in January. Most of these places are offering $12 an hour, and they're not getting anybody. And I said, why don't you offer 13 or 14 to see if you can get somebody? And the immediate pushback I get is, well, if I offer 13, then I'm going to have to pay everybody on my payroll another buck or two to keep them around. You know, I can't, you know, kill my current job force. Or, you know, some of these small businesses, talking to them, they're saying that, you know, that they can't afford to. And, you know, that in the grocery stores and everything, there was a lot of older people who were working there and a lot of teenagers. Well, I've talked to a lot of parents around here, and they still don't believe it's safe to go out and work in this environment yet, even with all the vaccinations and everything down. And a lot of older people don't feel comfortable going out there. And these, you know, fast food joints and even the grocery stores were having problems getting people because they wanted to pay the minimum wage before the pandemic. And so I really wonder how much of this is really real.
Well,
that's my 2 cents.
That's a good question. But let me see, the food industry is a tough industry. And because I have a daughter who's a very accomplished chef who was begging for $18 an hour with benefits, begging. And I'm telling you, very accomplished, has a great resume. And the food industry is absolutely insane because it's all built on the backs of those low paid workers. So I think that's going to be an industry that needs to restructure itself dramatically. And I've had, when I was young, I had fast food jobs because, hey, who didn't want to work, in a fast food? First of all, for the people who came in, it was a great way to meet young women, and it was a fun place to work. And you knew, but it was grueling, and the pay was, but relative to other jobs back then, the pay wasn't bad. Now the restaurant pay has really lagged behind, and people go out to eat and it's affordable, but it's built on the backs of, and I know this from my daughter, of a lot of people. And then, the owner wants to extract as much rent as he can out of the place. So it's all been done. It's going to go through a massive change. So, and I think that's a good thing, by the way, because now my daughter's doing, she worked at really two of the best restaurants here in she moved down here a couple of years to Scottsdale, and she had to quit. They would not, because they were corporate and the pay. So she went and got a private chefing job, and now she's getting paid to working, a third of what she worked, although she does all the shopping, and one of her strengths is that she knows so much about the farm to table and nutrition and food science. So she knows her stuff, but she's making a lot more, working a lot less. And she does private gigs, which I can't even begin to tell you. And I think those are going to become a big thing too. She'll do, even during the height of COVID, if they were all same family, she was doing some private gigs of 10 people at a home. And you can't believe what people are willing to spend, because then they're not paying for alcohol because they're using their own wine or alcohol. And I think the food industry is going to go through a massive, massive change. So Neil, I don't know whether it's going to be automation or if you want to go out to eat, you're going to pay more, because I don't think there's anything going back. And I just read an article in the Chicago Tribune that they've had to hike these prices. And anecdotally, I'm down here in Scottsdale. About 4 or 5 weeks ago, I went to pick up some Chinese food, and they bring it out to your car. So I'm sitting in my car, and a guy pulls in a brand new BMW SUV, and he's picking up food, and his food comes first, and he's yelling at the woman who brought out the food. And my window's down because I'm talking to her, and I listen to him, and he goes, "You can't get, he says, you can pay $16. People are shit." He says, "Now you're having that wrong. I'm not of that ilk. I'm a believer that the private sector, again, I'll say it all over and over, public sector unions, I'm not a fan of. Private sector unions, go negotiate, get all you can. Private sector workers, go get all you can. I'm all in favor of it." So he says, "You can't, it doesn't matter how much you pay." He says, "I just drove by, they just opened a White Castle down here." So the White Castle had a sign down, it's the first one in Scottsdale. And they were paying, a big sign, $15 an hour. He says, "Can you believe they're paying $15 to flip burgers?" And I looked at him, I go, "You're embarking on this with the wrong person. So if you want to go down this road," I said, "I don't want to see you in your new SUV, BMW, bemoaning paying $15 to flip burger. I don't want to hear it." I said, because the American worker has been shit upon for the last 30 years, which they have, by the breakup of private sector unions. And they are the ones who've really suffered under globalization. So the guy says, "See ya," and he pulled right out of there. That was a conversation you want to have. So this will not be resolved anytime, but people are going to have to pay more. When I go into certain stores, I like to shop at Safeway, owned by Albertsons. I happen to be an original investor when Albertsons went into a bankruptcy, and so I've been invested in that. But I asked the people who work there, because they all seem to be pretty good at checkout. And I go, "How is this?" They go, "I love working here." That's what they tell me. It's not why I invested in it, but it is nice to hear. Everyone to a dime said They pay above everybody else. We get benefits and we're treated right. I said, he said, why are you asking? I said, just asking. I like to see with the places I am supporting. I like to see that they support their workers. And I think that's going to be a change, but that's a good thing. But that should come out of corporate profits, by the way. So we haven't seen that yet. You're not going to see corporations able or businesses able to raise prices as dramatically as some people think. And that's why the Fed, when they talk about transitory inflation, that's part of what they're banking on. But I've never been a believer in, I've argued against the Phillips curve for 45 years, so for different reasons. But this will not resolve itself. That's what I'm saying to you there. And I don't know the answer. But the food industry, I think, is going to go under a major change.
Just the steaks we had the other day. There wasn't a steak for less than $77. I ate at Chicago Cut not a month ago, and they were.
Well, yeah, but 2 years ago there wasn't one for less than $87.
Yeah, that's true. Yeah, you're right.
Listen, I can afford to eat there because I officed with the well, they were at that time Vine Street, but now they're Praxis, the fund, and they're so I used to sit in with them quite a bit. So I'd go there in the morning, and they were at 300 North LaSalle, where Chicago Cut is, and the building made Chicago Cut be open for breakfast, and they hated it. They're still open, I think. Well, maybe not now, but they had to be open for breakfast, and they hated it. And you know what? Once or twice I went with people who were in from out of town to go have breakfast. That truly was an arm and a leg.
Oh, I bet it was.
Oh God, it was a joke. It was. I said, I can't believe I'm doing. I can go to the cafeteria in the basement. So Fed things today. I'm listening closely about a question about Tudor to see if Powell answers it. I would look for the headline of an increase in interest on excess reserves, because that'll come out as a rate hike. Don't be fooled by it. It's just correcting the plumbing, and it's minimus. But the headline will probably drive assets a little bit lower. But I think the curve will flatten a little bit off of it. And I think after initial sell-off, then it all depends what else we hear and what the vote was. I'd like to see, to at least be somewhat honest, a 9-3 vote or something. If there was really dissension about this concept of transitory. But I will, and I'll end with this. So is everybody comfortable? I hope I gave you something.
Yes, very good. Excellent conversation.
Okay, so I went to a baseball game last week. I saw the Diamondbacks play against the Mets. And every time my son-in-law, who's a big Met fan who lives in New York, always loves when my wife goes, because whenever my wife goes to a Met game, the Mets win. So we went to a Monday night game. I hadn't been to a game in a long time. DeGrom was pitching. The Mets were heavy favorite. They did win. But I'm an old line guy. I'm an old time guy. I went there. I didn't have tickets. It's Diamondbacks stink. And so I walked up. I bought tickets from the window. $46.50 for pretty good seats. Almost like going to the Cell or whatever they call it. It's White Sox, Comiskey Park to me. But
Guaranteed rate field.
yeah, it's like humane prices, at least, unlike Wrigley, which, being a Cub fan and being a seat holder for 35 years, I was used to paying premium prices all the time. But no cash. I had a pocket full of cash to spend. No credit card or debit card to my phone. Okay, I did it. Then I go inside to buy concessions. No cash. So I would ask Chair Powell this. The Fed is always discussing in the Fed Listens stuff about the bottom part of the US society being underbanked. Well, if you start going to a cash-based system, you are going to lock out the lower strata from partaking in baseball games. Because I hear this is the same now in 20 different ballparks, 21 or 22. In fact, what my son-in-law told me at City Field is if you come with cash, somebody is selling debit cards and charging you a 5% fee to buy it for any amount.
Capitalism.
Well, that's capitalism. As far as I know, cash is still legal tender. So be attentive. And I would ask them, well, don't you think it's wrong to lock people out? And don't forget, certainly the bottom 30, 35% of our economy, a lot of those people deal in cash. They get paid in cash because they're working side job. So you're going to lock them out because they're not banking, by the way. And the Fed openly admits it's a problem. So how would you support this problem? By locking all these people out of the ballpark? And why should they have to pay extra money? It's like, people who I have for years boycotted currency exchanges because they prey upon poor people. And they say, well, they do them a service. Yeah, we can get into that philosophical debate. And I'm pretty sure I'm going to win it. But, the currency exchange lobby in Springfield was pretty strong to keep them afloat. And why should they have to pay a fee to do that? What is that, a poor person's fee? That's what I call it. I don't pay that fee.
It's another tax.
Is that a tax for being poor? I mean, so many ways. So instead of some idiot asking, are there enough circulation? Maybe I'll ask some real questions. We'll wait. Anything else? I'll give one more about the Fed. Otherwise,
Any follow-ups, Neil, Jeff? Maddie, anybody? Hank, Brett? That's interesting, Ira, about the ballparks. I can't see Sox Park doing that because of the working class neighborhoods that surround the park, let alone the working class suburbs on the south side where people come from, the electricians, the firemen, the city workers, the plumbers.
Yeah. And I resent it being forced into the electronic currency system, because that's really what a debit card ultimately. And then, of course, I know where we're going, and we haven't even discussed that, but that'll be so I'll be around. I'm around now until I head to Florida to go see to help Josh because he's going to a trade show. So my wife and I are going to go down there for 8 days to help Josh.
Oh, nice.
With the kids. But that's not until July. So I'll be around. And these Bitcoin and stable coins. And again, I wrote that one piece where Brainerd, talked about stable coin and it being backed by basically a basket of currencies, which somebody wrote to the blog, oh, Pierre, he was 100% right. It sounds like an SDR, or she even threw in gold backed. That's a very important.
Yeah.
And that's worthy of a conversation because where did that come from? Especially her.
No kidding. It came from Judy Shelton.
Yeah, I don't think that Brainerd would be talking Judy Shelton, so I ain't going there.
We do live in interesting times. Again, thank you for your time, Ira. I
hope this was helpful because again, we don't need gibberish. If we can't put it into use to find profitable trades, it's kind of silly.